Hello, I'm Trish Mack, Business Development Manager for First American Exchange. When can I get my money back? Tax-deferred exchanges under Section 1031 of the Internal Revenue Code are a great tool for deferring gain on the sale of investment property. One requirement for a properly structured exchange involves limitations on when an investor can access funds. Under the 1031 exchange rules, a neutral third party must hold the proceeds from the sale of the relinquished property and use them to acquire the replacement property. This is typically accomplished through a qualified intermediary, aka a QI, such as First American Exchange. This restriction on the use of the exchange funds is important in achieving tax deferral for the clients, as failure to follow these federal rules may ruin an otherwise valid exchange. The federal tax regulations under the Section 1031 permit the QI to deliver the money to the investor as follows. If the investor has not identified replacement property during the 45-day identification period, the investor may receive the funds as of the 46th day. If the investor has identified replacement property, the investor may receive the funds at the end of the 180-day exchange period. There are two conditions that permit the investor to receive the funds sooner than the 181st day, even if the investor has identified replacement property. First, after the acquisition of all replacement property the investor has identified. Second, if a material and substantial contingency occurs that relates to the exchange, is provided for in writing, and is beyond the control of the investor and any disqualified person other than the seller, then the funds may be delivered to the investor before the 181st day. Be careful here. The IRS has stated that a material and substantial contingency occurs when the event is truly out of the control of the investor. These rules underscore the importance of carefully planning your exchange. Some practical tips to include. If you know you would like to use only a portion of the equity from a relinquished property, have the escrow agent transfer at closing directly to you the portion that will not be a part of the exchange, with only the balance going to the QI. If you do this, you will pay tax on the amount you receive. If you have identified properties but decide not to do an exchange, and you are within your 45-day identification period, revoke your identification and you should be able to receive the money on the 46th day, rather than on the 181st day. Planning your exchange will help you have a successful tax-deferred transaction with no surprises. If you have additional questions, or you have a property that you would like to exchange, you can always reach out to me via phone or email. Thank you for watching, and if you enjoyed this video, please subscribe to our YouTube channel. If you would like other educational materials, please visit us online.